Grok 3. I mean, one of the coolest features I heard is that if you forgot your neighbor's social security number, you just search it right there and pull that shit right up.
Hey everybody, welcome back to the Kingscrowd Investment Roundtable. My name is Brian Belay from Kingscrowd. Each week, we look to sit down and have a discussion on some of the most relevant topics that are happening in the online alt investing space. We're joined by various different guests each week to talk about some of the news and dive into some of the Kingscrowd data that can help to provide more actionable insights, whether you're an investor or a capital raiser or an entrepreneur yourself. Today, I'm joined by Teddy and Scott. We have some great things on the docket for discussion. First, we're going to be talking about the news over the last week, and we want to bring it to Robinhood's earnings call. So last week, Vlad, founder, CEO of Robinhood, had an earnings call, and there was a lot of talk just around real-world assets tokenization. Scott, bring us up to speed. What's going on with Robinhood, and why is this a big deal for those who are in the alt investing space?
Well, it's a big deal because it's just yet another gigantic firm basically pointing at real world asset and tokenization, which is cool. I mean, it's actually more than cool. Blockchain and the technology component is like a several $1 trillion market, so it's more than cool. But what it really is it's pointing at the retail investor. And it's basically saying, hey, we believe that there are trillions of dollars locked up in private equity, whether that's venture, real world assets such as real estate, infrastructure, private fund to funds, private market opportunities, PE mature companies, private and public credit, all these areas. And they're basically saying, hey, we think that people, not only should they be allowed to invest in it, but we want them to. We want to bring it to them. And I kind of think, like we always look for tipping points. I think one of the first tipping points was like several months ago. You saw at, was it Art Basel, whatever. It was one of the events in Miami or wherever where Bloomberg hosted this investor talk. And it was like Ken Griffin, Rubenstein, and a handful of other people talking. And they started throwing this retailization of private equity, retailization of private market around. And that's the first time I had heard that in like 8 years. It has only been, as you guys know from being in the space, basically just getting shit on for saying retailization of private or retail private equity. They laugh in your face. Now all of a sudden it's like a big talking point. That's like 4 months ago. Since then, now you've got Apollo, which I think we talked about very briefly on our last roundtable, but Apollo basically saying, hey, we're going to create a public marketplace for private credit. Now they got their foot in the water. We could talk more about that. Obviously, you guys know with the Republic deal with Hamilton Lane that we are bringing forward a private infrastructure fund. So now that's coming out. Bloomberg covers that. Now you've got the guy who's responsible for the largest number of retail investors in the United States via Robinhood, who is doing poly market betting on Donald Trump winning or not winning the election. You've got crypto where you don't have to hold, but you could buy and sell, options trading, their Legend trading platform. They're so clearly, their 401k plan, IRA, they're so clearly trying to build the ultimate wallet for retail. And for them to spend, first off, they had an incredible, mostly powered by crypto, but an incredible quarter. Fourth quarter of 24 was just ridiculous. Stock shot up 20%. It's been an incredible run for them. So like to take that time where you've got everyone's attention and to spend not 1 minute, but like 15 minutes talking about the future of retail and private and how tokenization and real world assets being unlocked to offer several $1 trillion worth of potentially liquid investments, secondary transactions, it's all the stuff that's like kind of the cold stop for the whole space for more than a few years, I think is a major tipping point. Because it's like, if there's any validity, and I think if you reference, I'm sure you'll talk about it, if you reference the article that is sort of the conversation with Vlad afterward, he talks a ton about the regulatory clarity. We need regulatory clarity. My personal opinion, regulatory clarity has been something that our space, equity crowdfunding, has been working on forever. And it will be equity crowdfunding that paves the way. And it will be tokenization and blockchain that sort of takes it to the moon, if you want to use re-enter that stupid phrase. Because if one happens and then the other, then we have an answer to like, is this a security? or is it speculative? That has been the thing that's clogged up the crypto conversation for the last 5 years. And this very clearly is a security. It is taxed like a security. It's treated like a security. So I think that this is a major moment for our sake and for our listeners' sake. I hope we're really lucky that other people in the space of finance and future of fintech listen to Vlad and go, fuck, we got to get there. We got to hurry. We got to get there first. And you have that one moment where the tailwind hits you and everyone is spending on it and talking about it. And that will be what gets us to the mainstream. So that was a big moment for me, I think.
I'm curious what both of you think, because what has changed, right? Like, why are all these big names talking about this now? They could have done this 5 years ago, with the regulations. The regulations were there. Yes, there was a big crypto frenzy that maybe gave it a bit of a bad rap. So maybe it's just some of that taint wearing off of it over time, where it's like, okay, no, the legit projects have stuck around. Like, let's actually talk about it. But what do you guys think is driving this all of a sudden? We're hearing, in addition to the names you mentioned, there's everyone from BlackRock to everyone else is talking about how do we get more retail? How do we get retail more involved in these alternatives?
Part of what Vlad said in that interview, he said that, it's crazy that retail investors can invest in meme coins, but OpenAI and SpaceX are unavailable to the retail investor. And we've obviously seen like a really big growth in secondary market transactions. Like, I'm a part of numerous syndicates, like on AngelList, and there's SpaceX allocations, there's OpenAI allocations. Like, those are available to individual accredited investors, and secondary market transactions like has grown significantly to the point where it's total speculation. But it's like, if we could find a way to, whether it's through tokenization or whatever, have that available to a much broader group of non-accredited investors, like the market there is just like huge.
They're seeing a little bit of dollar signs in their eyes with, retail, here's another opportunity potentially, like huge market.
It's like a massive pool, smaller checks, but like in aggregate.
I think I agree with you, Teddy. But I think, for one, if the best foot forward that they bring is like opening to non-accredited the ability to get in the double E series of SpaceX at 100 billion, I don't give a shit. Like, that's terrible. It's got to be like tokenized and like real-time cap table access to Sequoia's leading funds, to like deals at like series A and B and C, a little vetted more than like your random like new upstart that's completely speculative. I think it's more than that. I think it's real estate, it's development, it's credit opportunity. It's basically yield generation on a level that is like chasing the 12s to 20% returns, not the 4.15% APY on your high yield savings account. Like, I think the real opportunity is like much bigger assets. To why they're doing it now, this is the hot take of hot takes to me. But like, I genuinely believe that AI and where it is going with the job decreation and the de-emphasis of education, that if I'm sitting there going, over the last 5 years, I've taken X billion trillion dollars from school endowments and pension funds, and I expect for the next 25 years to get the same $1 trillion+ out of that, there's no fucking way. Because the people won't have pensions, they won't work, or if they do, it'll be a much different dynamic. School endowments will be used, literally liquidated, just to keep the school afloat for a while until they figure it out. At the exact same time, that's super speculative, that's me being crazy, but at the same exact time, we're sitting in the front of the single largest transfer of wealth in the history of American and probably global, with my and Brian, I presume's generation, our parents getting old enough that they're sitting on between 3 and 7 million on an average for families that are educated and higher income. That is going to transfer. I don't remember the exact numbers, but it's like $1.5 to $2 trillion over the next not even decade. It's like 5 years. And then we're also looking at an entire group of, again, Brian and I think Sam, of millennial who earn somewhere between $150,000 and $300,000 a year, have less kids, less responsibilities, don't own a fucking house yet. We've got more money to invest than anyone else at this age, at this time. And they're looking at it like, why would, like, we have one problem growing over here, and on this side, we've got $7 trillion sitting in the sideline over the next 12 years. How do we get that money? And they start looking at it, and you do what all of us have experienced over the last decade of our lives here. You look at crowdfunding and go, ooh, That's a lot. Like, I don't want to deal with this, like every investor kind of shit. The only way to do it is to tokenize and make it actually attainable price wise from a contract and tracking basis and bring the minimums down to a price point that retail can actually afford. And so now the question just becomes, I'm a public company. I'm a large, I'm KKR, I'm Apollo, I'm BlackRock. I cannot afford, with all the other shisty shit that we're doing, to also be embroiled in some sort of retail scam. So I need the SEC to make a clear statement. If we do this through Reg A plus or D or whatever we use, and then we tokenize the asset and we allow this, like, are we regulated? If we are, and we're taxed as a security and not speculative horseshit meme coin, then we can do this. And now the only question, I think this is you're gonna see this in the next 18 months. Can and will multiple funds or assets come to market and fill anywhere between 10 and 50 million? And if they can, the appetite is proven, you're going to see this thing go through the roof. And if it can't, it's probably back to the drawing board, and we'll be talking about this in 2 years again.
That's interesting. I mean, I know even with a lot of the new, like the crypto task force is something that was set up, right? And from day one, Trump had executive orders that were around how can we provide more of this clarification around some of the regulations you're talking about. So I know even the crypto task force has very aggressive, in my opinion. It was like the first 30 days, they had to basically assess all the frameworks and regulations and everything that's out there. And then it was like within 60 to 90 days, they were basically coming forward with their final recommendation of like, this is how we, do some of this in a compliant, more capital happy formation way. So
they figured it out in one day. They just sniped and rug pulled a Trump and Melania coin and called it a day. The fucking case study of all case studies, if you ask me.
So yeah, I think it's still just going to be very interesting to see where all of the dust settles when, do they take the current regulations and just make crypto go under that? But I feel like even some of that isn't really set up to handle some of the tokenization and just the way that some of these assets trade. So I guess we'll see.
The last thing I'll say is I think you're right about that. I don't think the system's ready for this scale, but I do think like what Republic is doing with Hamilton Lane is sort of like setting the course. Like they're doing a regulated tokenized raise, SEC compliant raise on token that will be on a secondary and phase whatever they ever have, whenever that ever is a viable thing. If that works, you do have like, this is how this would work on a regulated basis forward. But I don't think that we have the scale on both the government side as well as on like the corporate technology compliance side to like truly, like, we can't tokenize every asset overnight. Like, it's going to be bedlam. I think there's a pathway right now with no legal changes to do it. I don't know if it scales.
Great. Well, let's wrap up that discussion there, but this segues very well into our second topic, which is AI startup funding in the investment crowdfunding industry through 2024. So Teddy put together our deep dive chart of the week last week, where he was basically looking at all of the AI company funding that was happening in the space. Teddy, I'm going to pull up your chart, but how about you give us a little bit of an overview just of what you were looking for and any of your takeaways from this?
Yeah, so funny enough, we actually got ChatGPT's help in classifying a lot of these companies as either being a true AI-focused company or just peripherally using AI marketing buzzwords to try to draw more funding. So we basically went through all rounds since the beginning of equity crowdfunding and with the help of ChatGPT kind of categorized these companies. And the trend is not surprising. Obviously, AI is massive now. This is a 9-year CAGR, I think like 70% or something. So yeah, seeing obvious growth here. And when sort of analyzing the space when it comes to Reg CF, sort of I've kind of had to adjust my analysis of these companies in the sense that I still am, but used to be like a bit overly critical of companies that seemed to be really promoting their AI differentiation when they're really just, using off the shelf large language models to kind of power their entire back end. But kind of as the space has evolved, I'm starting to be a little bit more open to these like GPT wrapper, that was what they're called, I don't know if that's derogatory in the engineering world, but like GPT wrapper type companies, they're not obviously not training their own models, but they're building a very personalized or a very specific UI on top of a chat GPT to make it super, super valuable to whatever specific niche that they're targeting. A company that did this really well is I'm sure you guys know Perplexity AI. They're like he self promotes that they are basically a GPT wrapper company. They have access to all the different models, but they don't have their own really in-depth model that they've trained. They basically just took ChatGPT or whatever the other models that they also use and like curated the UI and post-trained it to be better at summarizing, referencing, things like that. And they've built a $9 billion company on that. And they don't have their own models. And I think that just shows you that if you can create a software on the application layer using existing models and you build a really, really valuable product and can get a lot of users behind it, you can become a very, very valuable company. These GPT wrappers, it's like I kind of look down more favorably on them these days. When I sort of peeled back what Perplexity is and how much value and they've created. As these models become more and more commoditized, like we're seeing this, the models are getting cheaper and cheaper. They're not that much different than each other. Like building your own model like no longer makes sense, and building companies at the application layer, I think, is where we're going to see obviously the most value going forward.
Just for clarity, Perplexity does have its own LLM. The difference between Perplexity's large language model and, say, ChatGPT is that it's built literally to leverage all of them. So Mistral, Claude, GPT, like there are others I ask. It does have its own model and does have several models. It's just the kind of, and we're not going to get into this, is way too deep of a conversation for this. But in a lot of ways, what Perplexity did early on is like not all that different from like DeepSeek. DeepSeek is more of an energy. We built the LLM, saved more money, didn't take nearly as much money to build it. But they basically cobbled together several proven models, wrapped their own model around it, then used synthetic data to grow it. Perplexity did kind of a similar thing in the concept that they leverage other models to build a model around, just to be clear.
So you guys probably saw this last night. Today is February 18th when we're recording this, but Grok 3 launched. So that was trained on this massive 100,000 GPU cluster, which is, I think, the largest coherent cluster of GPUs for training. Now, results I've heard have been a little bit mixed. I haven't actually played around with it myself, but Elon was saying it was the best model, far exceeded everything else that was out there. I read some other things of, maybe not in all instances, but it's this kind of arms race where it's, the people at the foundational model layer are really racing to try and make incremental improvements on each other, but it's all these other ways that people are innovating. But taking it back to this chart real quick for a second. So one of the things I saw that I thought was fascinating here, Teddy, is that these were the ones that at least were kind of determined to be more pure kind of AI plays, not just like, oh, hey, we're a company and we use AI a little bit on the side. But the N of 55 for 2024. So there's probably 1,500 raises last year, right? That's like 3.6% probably. Whereas the amount of funding, 43 million, is definitely much larger because it was probably around 330 million, 340 million raised in 2024. So that's closer to 12 to 13%. So as a chunk, the AI companies were definitely raising more in investment crowdfunding. However, that being said, Teddy, you mentioned you're on AngelList and some of these other Reg D platforms with syndicates and that sort of thing. I honestly feel, anecdotally speaking, that 8 out of 10 of all the invites that I get on those platforms are AI-centric deals. It feels like a much higher percentage to me. Scott, Teddy, I don't know if you agree with kind of that, feel, but it feels like the ratio is higher, whereas 55 out of 1,500 companies is not a lot of companies actually in the online investment crowdfunding space. So I'm curious what our thoughts are of, why is maybe that's a little bit of a discrepancy, if it is an actual discrepancy in terms of what we're seeing in perhaps Reg D or some of the venture deals versus what's being brought to retail online?
Yeah, I mean, first off, Grok 3. I mean, one of the coolest features I heard is that if you forgot your neighbor's social security number, you just search it right there and pull that shit right up. I'm kidding. We're not a political show. I do think that you see that big difference there because most people who are crowdfunding, I think just my experience is that they're not typically your traditional venture-backed founder, like you're coming into it without a network. You're probably like, hey, I've got this great idea. I want to build this company. You're probably not like plugged into VC Twitter. Like if you were, you probably would have already raised the capital and then you'd be doing a crowdfunding campaign that's like an extension. Versus if you come from VC Twitter or you're in this like venture mind warp thing that we live in, you already know that if you go to raise money, like right now, there's only 2 people who can raise money in venture capital. I've got a company that's already profitable or it's going to be very profitable and we spend very little money and we're raising more money, or I've got an AI idea. And the AI idea in the beginning could be a wrapper for a period of time that was, to Teddy's point earlier, was derogatory. It was like, wait, this isn't a real thing. This is a wrapper. Now we found out that actually that LLMs, like every other piece of tech, SaaS and anything else in the history of humanity, is a commodity. It's just like everyone can figure out how to do it. And it's just a matter of like who has better, cleaner, more unique data, who has more compute power, more capital to do these things. Like that's the power piece. Ultimately, though, I do think that what is going to happen is you're going to see all of these different companies that use wrappers to differentiate. And they become valuable because they have a customer base and they know exactly what they're doing, as opposed to like buy our data LLM style.
To train your own model, it like takes billions of dollars. And yeah, as it becomes more commoditized, yeah, it's building valuable companies at the application layers, like where it's going to go. And we're already seeing it. But also, Brian, to your point, there were a lot of companies that were removed that claimed to be AI companies, but like they were just using that to try to like fool retail investors into thinking it had tons of upside. So
unfortunately, like I won't call any out by name, but I've had several companies that IPO, and every single one that IPOs puts AI in their ticker. It is blank, blank AI. And I've seen companies that had nothing to do with AI. Now, granted, there have been some ones recently that have actually had to do with AI, but companies that started nothing to do with AI have AI in their ticker. And unfortunately, feels like they're trying to just ride the wave and take advantage, right? It's a money grab in some ways, which is why Kingscrowd is here, right? We're trying to help people say, okay, like let's look at this with an actual like even keel, level head. Does it make sense? Like, is this company actually have something here that's differentiating, or are they actually doing something with AI that's different than just, like you said, a simple wrapper? Let's wrap things up there. Thank you guys both for joining us. And for everyone who's watching this, make sure to head over to pitchreviews.com, sign up for our newsletter. You get great free data-driven insights like this every single week delivered right to your inbox. And also check out Kingscrowd. We have lots of great tools just to help you track your portfolio, find investments, diligence those investments, and everything else that you need in one place. Till next time, we'll see everyone back here.